What's going on, YouTube? Stocks by the Numbers coming back to you here with another stock here as per request. This is Li-Cycle Holdings or Li-Cycle Holdings, ticker symbol LICY, listed here on the New York Stock Exchange. Market closed a few minutes ago. This stock $5.59, down 9 cents on the day or 1.67%. Let's get into it. So market cap right now, 984 million. As we see, this company came out a couple of years ago, and just like a lot of these smaller cap stocks, whether they're batteries, tech stocks, EV companies, they're all kind of falling into this descending wedge, just waiting for the apex to explode out, right? And before I go any further, I just want to say, checking out the demographics on my channel, I have a lot of different age groups of investors, down in their late teens, early 20s. I have some people up in the 60s and the 70s who subscribe to the channel and leave comments, and I also have people internationally, really all over the world I'm seeing come in, watch the videos. You guys are like auto-translating the closed captions and whatnot. Right now I really don't have the time or the ability to translate into all these languages, so if the closed captions, and the English is giving you a problem, I'm very sorry, but right now I really can't rectify that situation. However, I just want to say I appreciate the support from all demographics, because what that tells me is, I'm kind of trying to cover all bases here and try to make everyone happy. Sometimes we can talk about a speculative play like this. Other times we can, go back and talk about a brand name company like Philip Morris, or Verizon, or check in on AMD, So that's why I just wanted to bring up the demographic, and of course let you guys know, don't be afraid to let yourselves be heard in the comment section, because again, I know I've kind of been doing the smaller cap speculative reviews in the last week or two, doing updates, especially on that Soundhound move. I'm sure you guys saw that, SOUN. Go back, check out the videos. We saw the poll, we saw the flag forming, it popped out and broke out. Stock was at what, like 190, guys, and it went up to I don't remember, 3.25 or something. But, I just did so many update videos on that, so I didn't want to do another one to just say, oh, hey, we got it right, it went even higher. Like, you know what I mean? Like, that really doesn't warrant your guys' attention. I'm sure you saw it. Excuse me. And, if you did have some bucks in it, congratulations. But basically, the point I was making is, if I do something like this for a week or two, and you're feeling left out, or you want me to go back to something a little bit different, just drop it down in the comments section. Believe me, I always make a note of it on the board, as you guys can tell. Anytime you guys leave a symbol in the comments, I'm slowly getting to them and making the videos, so your voice will be heard through my voice, so to speak, if you will, if that makes sense. All right, whatever, let's get back into it. So this company, right, lithium-ion battery recycling. Okay, that sounds freaking awesome. Let's see what's going on. Up. Motorcycle went by. So here we have obviously big losses, companies coming in with a couple of million. This is a good quarter here, 8.6 million, over 6 million, excellent estimates here. Then we have a very rough quarter, then we have another rough quarter, and another rough quarter. Okay, but see, what bothers me is, see this top article here. Oh, reports doubling of revenue over 2-month period. What, from here to here? They missed heavily and posted 3 million, but they missed heavily again, but revenue went up to 5.5 million. Like, that's embarrassing. That really is embarrassing, that is the headline of your article. So obviously that person is paid to manipulate the public, in my opinion. That's the way I'm looking at that right there. There was no way, if I had to put a headline for an article, if you were paying me to write an article on this company, on the date of this release or whatever, that is not the way I would title my article. That's just me, right? So that's what I mean. That's why sometimes you can't just blindly go off, a couple of news articles or what someone at the barber shop might have told you about the stock. Like, yeah, don't get me wrong. Like, it's nice to hear about these things and what could potentially happen. But this is why you have to do your own due diligence and you have to do your own digging, right? Now, I understand they came out with earnings. Something positive could have been said. Right, oh yeah, doubling of revenue over the last 2 months, okay, right, but you still kind of missed earnings. Here we signed a partnership, new spoke facility in France, okay, so we do have some positives. And again, we need to let the company build itself up, build more facilities, and increase the efficiency of how they're doing their operations and narrow losses and bring in consistently increasing revenue. That is how you get an explosive stock that goes from 5.5 to 15.5, right? But it deserves to be at 15.5. It doesn't just go up just to go up. But moving forward here, so we're looking at a couple of rough quarters here. And now next quarter, mid-June, estimates 15.2 million. So they're expecting a big jump here in this company's revenue. Again, most on record was 8.6 million here. So you're asking them to double the best quarter on record. And this is, again, a descending wedge, which technically is bullish, waiting for a pop out and a breakout. But it's going to need a positive catalyst if it wants to break out before the apex. Okay, and right here, in my opinion, I think they may potentially miss those estimates. However, if they come in with a ridiculous beat, they come in with like 21 million revenue, then I can understand breaking up and like touching this 5.5 and potentially even this like $6 fib level right here and rallying the stock up a little bit. Definitely justified, but I really don't see it happening. Fast forward 3 months after that, now we're in September. You can see we're at a little bit of a tighter range. The company can potentially, again, break out here based off estimates. But in my opinion, I think it's going to happen more down here. I think it's going to be the December earnings report or potentially even going into March of 2024. So in my opinion, I really do think this company will continue to struggle and it will maintain this descending channel here, this descending wedge, and just wait for a much, much later earnings report to pop it out and break it out. Because right now it is massively overvalued. The company brought in $13 million last year, as we see here, and the market cap is still about $1 billion. So this company can easily, it could easily drop like 50%, but I really don't think it's going to be that drastic because that'll bring us down to like 280. I don't think so. If you see coming down to this apex, let's say right here, right, and now we're in February, March, look at the stock, about 330. About 330. So we could definitely see about a 2-point haircut right here. We're in this descending channel, so it didn't line up perfectly, but you can almost see a little bit of a shoulder and a head and a potential shoulder here. So we could, boom and bounce and drop down right now off of that going into earnings because I don't know how excited people will be going into this quarter. So it may ride the bottom trend line and sell off going into June earnings as opposed to running up in anticipation of earnings, right? So you may have the opposite effect. But in my opinion, I do think it's going to take a while. And if we just check these financials very quickly, we switch over here annually. And again, we have no PE because we have a negative EPS, which stands for earnings per share. So if the EPS is negative, there is no PE ratio, which is found by dividing the stock price divided by the EPS. Moving to the price to sales, we can see trading a touch below 74 price per sales. It is slightly coming back down to earth. If you look at that metric, it's a little extreme, but that's not really a metric I use. Price to book, bashed the mic for you. Price to book, my apologies to your ears. Trading 2 times book value right now, and the enterprise value here, $763 million. The enterprise value they have stated as can be used to calculate how much company will cost if it is bought out by another company. So if we use that metric, we can say that the company is actually worth about $200 million less than it's currently valued, right? So that's what I mean. $200 million off of $700 million is what? Maybe like 22.5%. We're at $5.59. So 20% is like $1.10. So that'll bring us down to like $4.40. So yeah, probably that's what I mean. Like the low fours we're going to start trending down into. I would say that, in my opinion, wouldn't be a bad entry if they really are anticipating bigger and better things for the stock, which they are. We're going to get into the forecast for a second. So that's why, having this go from 5.5 to 4.5 down to like 4.30, 4.15, right? It technically on paper, that seems like a decent entry level and definitely a better entry level than 5.59. The return on assets, equity, and invested capital have been slightly moving in the right direction, trying to go back to flat or potentially even positive. The gross margin percentage, operating margin percentage, EBITDA, again, earnings before interest, taxes, depreciation, amortization, and the net margin percentage are all significantly negative. And if we switch over to the balance sheet, well, no, we switch over to the income statement, we can see the company up to $13.5 million in revenue with the cost of goods $85 million. Obviously, that is a negative number, and then another $40 million for operating expenses, and this is where we see the bleeding, right? So if you're going to tell me it's going to cost over $100 million to operate and run the business for a year, you have to really start bringing in this revenue. You can't keep trickling in, $4.5 million, $9 million, $5.5 million, $11 million. Like you can't be sporadic like that. You really got to start chunking in 10, 15, 20 million in revenue. You got to start beefing up these numbers. And I know everyone's going to jump in the comment section and say, well, they just bought a facility. You got to give them some time. I know all that. I know all that. But that's what I'm saying. If you jump in the comments and you're like, oh, they're just starting out, you got to wait until they start streamlining. The stock's going to go off to the moon. Yeah, you're right. But until that happens, it's not. That's it. Like, it's really that simple. So, they're talking about facilities in France and everything like that. Okay, great. That's why I'm saying, in my opinion, end of 23, early 24 would be when is most likely going to break out of that wedge and really start pumping out some decent numbers. If we switch over here to the earnings here, look at these estimates here quarterly. As we see again, 15 million off 16-cent loss, and they're basically maintaining that loss, jumping up a little bit going into Q1 of 24 to minus 14 cents. But look at the revenue, 15.2 million, 22.5, 41.5, 58. So they really are expecting bigger and better things for this stock. And this is what I'm saying. With estimates chunking up like this, like here this quarter, 15.2. If they come in with like 10, 11, technically it's a miss. However, revenues have grown, and that it would now be like the most revenue they've brought in a quarter. So I wouldn't even view that as a massive negative. But now we fast forward here, 22.5 million, and let's just say now they bring in like 8.5 million. Now we have an issue, right? I really don't give a shit on how much you like the stock or, how the facility's freaking doing or whatever the hell you're talking about. The money needs to come in. The numbers do not lie. And then if we fast forward here, 41.47 million, if the company bounces back down and comes in with like 12 million, like, you know what I'm saying? Like, you can't tell me we have a massive winner on our hands here. However, I'm not going to be pessimistic, and, these supposed misses on revenue won't happen till they happen. I'm just saying that I think it's going to be difficult for the company to come in with, double their highest revenue quarter and then jump it up to 22 and then 41 and then 58, right? These seem like big jumps. However, they are basically saying this is the turning point time for this stock. So this quarter is going to tell us a lot, but I think it's going to be more this quarter here, Q3 of 23, which will be here in September to December. It's going to be this quarter or this quarter, in my opinion, that's really going to potentially break the stock out of this potential wedge. However, again, if they're bringing in 70, 80 million for that year, the stock still has a market cap of about $1 billion. So that's why, even with these numbers coming in, it could continue to sell off and slightly pull back because it was so overvalued to begin with. And that's the unfortunate part here, because I know it's a newer stock. It's only $5 a share. A lot of young investors might be hype about it. They're in the battery recycling sector, right? So they have to be huge in a few years. I get it. The problem is they screwed you over by overvaluing their stock when they first hit the street, right? If they were smart, they should have valued this freaking thing down at like $2, $3. And then everyone would have said, wow, that's less and lower than what we anticipate for your stock. So you can, at least remain flat or potentially slightly climb over this whole time of even bringing in a couple of million in revenue. At least you're seeing, okay, the business is, doing some things and they're bringing in a couple of bucks, right? So they're alive. And that's what I mean, they overvalue these companies. I mean, think about this. The company just started making a couple of $1 million last year. And this thing came out at almost $2 billion valuation. Like, come on, bro. Come on. You're not even on record yet of making $10 million for the year, but your company's worth $2 billion. That's what I mean. It's like George Carlin said. It's all bullshit, folks. It's all bullshit, and it's bad for you. That's why. Don't buy into the IPOs unless it's an established company like a Visa that's, now listing and going public. So at least all right, it's a brand name company. People use it. They're actually making money and doing business. So, okay, I'll buy some shares at IPO. These little no-name companies who are projecting to take over the world by 2026, you don't buy those when they go public. Because as we see, they sell off 50, 70, 90%, and then we can scoop them up for pennies on the dollar. So long story short, great story here, great projections, but I wouldn't buy it at $5.59. I'd buy it at $3.59. And that's basically, what it is. I really don't have to dive into any more specifics, really, or any big metrics, because, not only are they not really telling us anything moving forward, but also they're just not there yet. They're just not established. The one good thing we do see here is on the technical side, this stock just closed at $5.59, bouncing off of this 50-day moving average of $5.55. So technically, this is still considered bullish, technically, and it may now bounce up back to this top Bollinger Band of $5.77, and they may even bring it up to the 200-day moving average of $6.04 before bringing it back down, right? Because you got a little bullish, you got a little hype movements here into the stock coming off of the earnings report, so maybe you take another leg or two higher, and then you pull back down into sub 5 and continue to sell it off into the 4s. Switching over here with RSI at 56.26, still mid-range, that's what I'm saying. It could take another pop higher or two and then start to pull back before turning south. Here on the weekly, RSI 48.17, mid-range. However, you can see traditionally, even going back for like the last year and a half, when it did hit this mid-range here on the weekly, it did then have a pullback and a sell-off, right? So you get these little pops, these little moments of excitement, and then everyone takes profits and they wait for it to pull back, and then they buy, get a little pop, make quick money, easy money, no analysis needed, and then you get out and wait for it to sell off again. Boom. Very, very easy money for any day traders here with a stock like this, because they're not emotionally tied and attached to the stock like you may be. They understand it's going to go down here at the low. I'll scoop it. It's going to come up here, reject this level. I'll sell it. I'll wait for it to come back down. Then I'll scoop it, and boom, round and round we go. But sitting here, even on the mid-Bollinger Band on the weekly of 550, you can see it bounced up and now closed at 559. So that's why in the short term, potentially like throughout this week, it's going to be healthy, and you may get back into the 6s here. But chances are it will most likely pull back after doing so. MACD still seems to be slightly rising. So again, you may have a little short-term pop here. However, in my opinion, I would not be a buyer of this stock until at least the second half here, the tail end of 23, or potentially even early 24. The company has to prove itself. I think this quarter and even the next quarter, where they're estimating $22 million for revenue, those are going to be the telltale signs. So if they come in near or even potentially beat those estimates, yes, I think they're going to pop it up out of the wedge, and it may start trending again and gain a little momentum in the next couple of months. If they seriously come in and miss with like 7-digit posts of like 8 million in revenue when they were estimating 22.5 million, then yeah, the company is going to probably get decimated and continue to ride the bottom trend line train. However, I'd say worst case scenario is like right here. It takes all the way till first quarter of 24 down at, as you see, $3.30 a share roughly, for them to come in with a decent quarter and have that catalyst to break out of the wedge and turn bullish again. So, I like the story overall. I just think we can get better pricing and timing, which again is what investing is all about. But hey, if you have any questions, comments, or concerns, drop it down in the comments section. Whether you agree, disagree, I don't care. I welcome all viewpoints. Let's talk this one out moving forward, because I do have a feeling it may be a decent name that everyone wishes they owned years ago when we turn around in 2025 and 2026. So let's keep the lines of communication open down there in the comments section. We may have something good here down the road. But we'll end it there. Once again, stocks by the numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, like the video, helps out the algorithm. It's all YouTube cares about. So make sure you push the thumbs up button there. Subscribe to the channel if you appreciate the content, if you like the videos I'm putting out. But moving forward, like I always say, I understand markets are rocky, they're volatile, they're uncertain. Sometimes we get emotional, we get stressed out. Just remember, I need you to stay positive. I need you to stay focused. Most importantly, I need you to stay disciplined. Okay? I want to thank you guys for stopping by. I hope everyone makes a couple of dollars. I love all of you. Have a great day.